So do you want to know how to get rich much quicker? You're probably wondering, should I be investing in property, shares, crypto, online business? Should I just focus on my career and get promoted at work? What are the different types of methods? Well, in this video, I'm going to share with you the #1 secret of Warren Buffett of how he compounded his wealth much quicker. And sorry to disappoint you, it was none of the examples above. So make sure you stay tuned towards the end of this video because I'll be sharing you the #1 secret of Warren Buffett and what he does to compound his wealth to over $100 billion. How Warren Buffett invests. So Warren Buffett, for those who don't know, is the world's most successful investor. Right now, as of September 2022, his net worth is estimated to be around $100 billion, which is insane. So how did he actually compound his wealth so much quicker than most people on the planet? And it's because he follows these two rules of investing. So make sure you write this down. #1 rule is don't lose money. Rule #2 is don't forget rule #1. So why is he so obsessed with not losing money? So the most successful investors that I know are always conservative. Their #1 focus is protecting their downsides before they even consider their gains. And this is why Warren Buffett's #1 rule applies, don't lose money. I'll give you a very simple example. Imagine you have $100 and you lose 50% of it in a market crash, for example. Your $100 has gone down to $50. So that's a 50% loss from your initial investment. But how long does it take for it to go from $50 back to $100? It's not 50% again, it is 100%. So you gotta make up much more lost ground to go back to where you were if you have lost money. And so this is what the successful wealthy people do in terms of investing, and they always want to protect the downside because they know that losses inhibit wealth creation more than the potential gains. So it's no surprise that why most people lose money in property, in shares, in crypto. About 90% of us actually lose money in those markets. It's because we focus too much on what's the best ROI, where's the best next hotspot in property. You know, it's all this kind of stuff. So we have to focus more on the downside, how to minimize our downsides whilst watching for the upside. But downside is one of the most killer factors of wealth. So make sure that you protect your downsides as per Warren Buffett. So here are some tips from Warren Buffett that I've learned which you can apply to your personal circumstances. #1 is buy below intrinsic value. So example, if a property is worth $500,000 market value, you try to buy it for $450, $480, anything below the intrinsic value, it gives you what I call a margin of safety, which means that if the asset does go down in value, at least you're protected by a margin. And that's what Benjamin Graham, which is Warren Buffett's mentor, always kind of stressed to Warren when he was still alive is don't lose money, have a margin of safety. So what's your marginal safety in your investments? How do you think about that? So the next tip is very, very popular. And it's be greedy when others are fearful and be fearful when others are greedy. Have you heard of that before? Because it is so true, so simple to do, but not easy to do in real life. Okay, so when others are crazy about property, for example, last year in 2021, you gotta be cautious because that's more likely to be overheated market. But when everyone is fearful about property, especially right now globally, but in Australia, when rates are going up, everyone's sitting on the sidelines, that's where the bargains, the value is. And this is rewarded people back in 2020 when COVID happened, the property market stalled, it went backwards a bit. That was the best time to buy, looking retrospectively, because last year, all markets in Australia boomed. And this same thing applies to the stock market as well. So always ask this question, and this goes to the next point that I want to reveal is Warren Buffett's #1 secret is where are we in the market cycle? Think about it. But the investments world, everything goes up and down in cycles. They overshoot the mean and they undershoot the mean, but it always follows a particular mean. So where are we in the market cycle? And I don't want to go too in depth about that because that's the outside of the scope video, but let me know below if you want me to talk about more about market cycles and what the signs of a bull market, of a bear market in property, for example, and I'm more than happy to cover those in the next video. But the market cycle is the most important thing that you got to consider when investing, because you don't want to be investing at the top, such as in the 2000 dot-com bubble and also in the 2017 city property market peak, because you'll take years, if not even decades, to recover the money you've lost. Remember, don't lose money. And the easiest way to lose money, from experience and from lots of the successful investors I've learned from them, is buying at the peak of the market when that's when your risk is maximized. So make sure that you know where in the market cycle you are. So that is it for this video. Thank you so much for watching. Subscribe and hit the like button if you've enjoyed this video, and share those with those that will benefit from this video as well. And just let me know below what other topics in investing in property, for example, or just in general that you'd like to know more about. I'd like to get your feedback so I can make more videos about that. Until next time, I'll see you on the next video soon. Take care.